Hi guys, today is a brand new day and I'm gonna show you how to trade gold on the 5 minutes time frame using price action with ICT. Alright, the strategy involves allowing price to make a run, like you have price running here bullish, then allow price to range and wait for breakout of the range before you enter. Okay, like we have a range here. Alright, then we have a breakout. So this is the appropriate point to enter. We also have a range here where price makes high, low, higher high, lower low, lower high, then breakout. So this is the appropriate place to enter. So the first point is to allow range breakout. Range breakout. Okay, that's what happened around here. But this is an uptrend. We have a breakout here. We have a high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, then lower low, lower high, lower low. Okay. Then identify pullback after range breakout. Now these are pullback. All right. Identify pullback after range breakout. Identify pullback or retracement after range breakout. Okay, it's a pullback. And point number 3, allow break of structure to occur. You have the pullback, then this is a break of structure. With a pullback, this is a break of structure happening here, BOS. Okay. Alright, where we start to have low, lower high, lower low. Okay, have a break of structure here. Our change of character happened around here. We have one happening here, but this more prominent. Change of character. Okay. So allow break of structure. Break of structure has already occurred. Now, point number 4 is that stop loss equals distance of over. Okay, distance of pullback from here to here to this point that pullback. So the stop loss for the trade should be equal to that distance. Okay. Enter after break of structure or enter after second pullback. Now this is our first pullback. As price progresses, we might see second pullback, or second pullback might already have started to occur. Alright, this might end up as second pullback, or we might have it somewhere around here. So point number 5, enter after BOS break of structure, or enter after second pullback. Now for this particular trade, I did not enter after break of structure, and second pullback has not even formed. I entered after the formation of the swing high. Okay, but that's tricky. The tricky one. I anticipated that price going to drop, so I entered after the formation of this second bearish candle, for which price might continue up and trip the stop loss. It's best you allow break of structure or allow second pullback, then you enter. Now, swing high or swing low is equals to swing high or swing low formed after second candle formation. Now this is a second candle formation, 1, 2, for this particular swing high. So after this candle closes, then I presume that this is my swing high, and I even entered after the second candle closure, anticipating that price is going to drop further to break this structure, which already happened. But I might be wrong, because the market is full of uncertainty. Instead of price dropping, price some other time I just continue up, giving me double bottom here and then tripping the stop loss. So I might be right, I might be wrong. Nothing is really certain when it comes to trading. Price might go wherever it wants to go. So that's the procedure. Range breakouts, high, low, higher high, higher low, higher high, lower low, lower high. So more like this area, price ranging, started to give bullish structure here, then ended up giving bearish structure at this particular zone. So by the time we now have the break of structure, is taken as our breakout. So the pull back before that breakout is key, because that's what you use to determine your stop loss. Now, if you determine your stop loss, your TP, if this is your stop loss, the depth of the pullback is your stop loss, then your TP will be twice that depth. Okay, or thrice, or 3 times, 2 times or 3 times of the depth. That will be your TP. So risk reward ratio, 1:2, or 1:3. But that's determined by the by this particular pullback determines your risk reward ratio. Alright. Also, another factor that determines your TP is where you have the support. The support is around here. You have demand, but you have support somewhere around here. So before the support, the demand before the support might end up as your TP. You might drag it down to this particular point, but it's best to be, it's best to be safe. Having risk reward ratio 1:2 or 1:3. Safer that way. So let's see. Let's take it to 1:3. We can always move stop loss. You can always move stop loss to break even. Okay, let's put it at 1:3. Okay, because of the depth of this particular, bullish layer. All right, let's take it as 1:3 and see how it goes. But we can always move stop loss after price. Okay, so that's the strategy, the good one. Try it on demo account. When you have a strategy that is new to you, try it out on demo account first before you go live, so that your money is safe. Try it out on demo account extensively. Be sure you know what you're doing. Be sure you understand the strategy by trying it out on demo account. If it works for you, then you can go live. You can give it a try on your live account. So this is the this is the run of it. Range breakout, identify pullback after range breakout, allow break of structure, stop loss distance of pullback, enter after break of structure or after second pullback. We are yet to have our second pullback. We might start second pullback if we have 2 successive bullish candles. We have 2 successive bullish candles, that might give us a swing low. Then we can take, if the second bullish candle closes, we might take that as our second pullback for you to make another trade entry. But for now, we have only one pullback and price is running. Price at the demand area. This particular demand area is another demand area here. So that's the strategy. Is a good one. It works very well around this time of the day. Talking about around 5:30 GMT or before 6 GMT or around 6 GMT. You get to use this strategy. Works almost every day for gold. You can try it out. Identify the range breakout. There, of course, after a bullish run or a bearish run, there will be range. Then identify the range breakout. Note the first pullback. That should be your stop loss. Then use the stop loss to mark at the point of entry, trade entry. Use the stop loss to mark ratio 1:2 or ratio 1:3 to determine your TP. Now, if the bullish leg is short, of course, you might manage or stick to ratio 1:2. But if you have a long bullish leg, you might extend it to ratio 1:3. But as price goes down, ensure you move stop loss to break even and then use stop loss to trail profit as price drops in line with your trade. So you can enter at the break of structure. You can enter after second pullback. This strategy is not a perfect one. There will be some occasion where you have price creeping stop loss. That is allowed. In trading, you don't get to win all the time. There will be some time you record loss. There will be some time you record profit, but ensure that your profit is more than the loss by ensuring good risk reward or good risk management. Of course, enter after break of structure or enter after second pullback. And your swing, for you to know your swing, that's after second candle formation. Second candle formation. So this is for this particular swing low. For this swing low, price has been dropping. Now you have the first candle formation, bullish candle formation, and the second bullish candle formation. As this closes, this is your swing low. Just like we have a swing low here, this is the main swing low. Then as price start to go up, swing high is formed when the second candle closes. So this is a swing high. So as price drops, you have just one bullish candle closing here. And even we have the second closing, we'll have taken this particular point as a swing. The price continues to drop. So this identifying the swing helps you to mark the higher high, higher low, lower high, lower low, the pullback, the extension, the bullish run, the break of structure, change of character. In as much as you can identify your swing properly, you should be able to identify all these features that I mentioned. You are able to determine that this particular point is a swing and price breaks it, you should be able to note that that is a change of character. You are able to identify that this is a swing and price break it, you should be able to note that this is a break of structure. So that's that for today's video. You can learn more about this strategy on our website www.beanfxtrader.com. You can go to the website to learn more on how to use this particular price action Chrome ICT strategy for trading gold, forex, volatility indices. See you in the next video.